Hey guys, hope you are all having a great weekend. Today we are going to go over the most important things that we need to be aware of. There are serious events that could cause markets to rally or absolute break this week, especially on Wednesday. We are going to talk about the Fed and oil and precious metals and meme stocks. It's going to be a loaded video, so buckle up. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. First, let's talk about some important developments. Steve Cohen's Point72 Asset Management is going to be pulling the $750 million it previously invested in Melvin Capital. They are going to be redeeming the money in portions over a set period of time, according to people familiar with the matter who spoke with Bloomberg. Citadel Securities is also following Point72 in requesting their investment to be returned, with them asking for some of its money to be returned last year and now this past January, requesting to get back about $1.5 billion of the total $2 billion they had injected into the firm to keep it afloat. For those a bit new to scene, Melvin Capital was financial crippled when GameStop and other meme stocks started surging, as they had great exposure. They were recorded as losing nearly 55% in a single month, which mean they lost about $7 billion of capital. Point72 and Citadel came in rushing to save the hedge fund, and in return, they received non-controlling revenue share in the hedge fund. More interesting is the fact that after raising all this money, Melvin has continued tumbling this year. They were down 15% for the month of January. They continue stumbling in many of their investments as of recent weeks, so it will be interesting to see where they end up. Let's talk about some big oil news. As you may have already heard, the Biden administration has been very interested in regaining access to Venezuelan oil. However, there is a lot of opposition in Congress to the possibility of the U.S. lifting off sanctions on the country. The main public argument being raised by senators is that we should not trade the democratic aspirations of the Venezuelan people for a couple barrels of oil. There are many risks that come with using Venezuelan oil, which for some reason are not being talked about nearly enough. Venezuela barely produces any oil these days in comparison to the past, and they are sure going to ask for a hefty price to rebuild their services up. I think many Congress members simply want the U.S. to take the path of least resistance and simply begin and expand producing oil here in the United States, which will bring prices back down, and then once we fill up our reserves, we can then begin exporting oil to other countries. This goes against some of the agendas of many politicians, and doing so would be seen as betrayal by party members, which is why they are trying to look into other possibilities. Right now, the Wall Street Journal reports that U.S. officials are exploring the idea of easing sanctions to allow U.S. companies to invest again in Venezuelan oil sectors and help raise the country's oil production to about 800,000 barrels a day. I have seen a lot of people ask, why is Russian oil affecting the United States so much? I want to explain this to you in simple terms. You have to think of the oil supply as a global commodity. Europe and Asia are huge customers for Russian oil, as you know, and the world is heavily interconnected. Oil is priced through a global market, so what happens there affects us here, even if we have very little exposure. Long term, this is good for us, because right now we are in the beginning reactionary stage of figuring out how to deal with all the changes, so investors are panicky, but once deals get set and changes are made, we are set to begin recovering pretty fast, that is, if the entire financial system survives the brunt of all these changes. In 2021, Europe got 0.60% of its oil from Russia while China got 20%. The US only received 90,000 barrels of crude oil per day in December, which is a tiny amount. What you have to keep in mind here is that oil is traded and supplied around the global markets. It doesn't matter a lot which country is getting crunched by the loss of Russian oil, because lower supplies of it will affect global prices anyways. If Europe buys less oil from Russia and instead replaces it with Saudi Arabian oil, the demand OPEC oil will have their prices go higher. The problem is that Russia is part of OPEC+, and they made it known well before this whole invasion that they would not be opening up their oil tabs. You see, OPEC+ had to heavily cut production to support their prices as a response to the pandemic outbreak. A lot of people were staying at home or working from home, so it meant demand for gasoline dropped. Oil prices started going down, so they started producing less to keep prices up. Now in the present, Russia being part of OPEC+, we cannot fully count on them to replace Russia, though with some serious developments. A United Arab Emirates ambassador told CNN that their country wants oil production to increase. There is a lot of changes happening, which is why markets are so uncertain and volatile, because it is hard to price things in. This leads to question, why can't the United States just increase their oil production? Again, the constraints brought about by the pandemic are limiting the effectiveness of domestic oil producers to fill the supply gap. Companies are having a really hard time finding staffers, labor, and specialized equipment. They are still reeling from the economic pains that came in 2020, which also commenced a series of bankruptcies in the sector. We have seen major oil stocks lagging behind the broader markets too. It's really all about demand and supply, but a lot more complex as restrictions, sanctions, and pandemic limitations affect the responsiveness and effectiveness to adapt to changing situations. Having this in mind, let's talk about this week. It's simply impossible to predict anything with any certainty, as a single bad or bullish report can make or break a week. So let's instead give you some of the events to look forward to this week. First and foremost, we have GameStop's earnings report on Thursday, March 17th, which I will live stream. This Tuesday we will have the U.S. Produce Price Index come out and get the Federal Reserve's Federal Open Market Committee meeting. As we know, Fed Chair Jerome Powell already took the steps to say ahead of the meeting that he would be supporting a 25 basis point rate hike to combat these high levels of inflation. However, with exploding inflation, relentless sanctions against Russia, and general market and investor uncertainty, we could see central bankers being forced to weight the risk of rising rates too quickly. Already, we have seen calls for them to delay the rate hikes. This Tuesday, we will begin to see how everything is going to happen, which is actually a very bullish thing, as investors will actually be able to begin pricing things in. Producer prices are coming out on Tuesday, like I said, and estimates are that we will see a 0.9% monthly increase and 10% year-over-year gain, up from the 9.7% that we saw in January. And lastly, the U.S. Census Bureau will release the February retail sales report on Wednesday, which experts and analysts believe will see dramatic decline in sales growth. Sales excluding autos are expected to rise 1% compared to a 3.3% jump in January. A friend of mine brought up attention to the London Metal Exchange, which he reasoned that the changes happening around some metals like nickel will begin spilling over to the overall market and the volatility that we see. We know that recent developments have Beijing exploring plans to rescue a billionaire owner of Tsingshan Holding Group from billions of dollars of potential losses after his bets all backfired. China's stainless steel producer is at the center of the surge in nickel prices. The London Metal Exchange suspended dealings in nickel this past Tuesday after prices doubled. Now Tsingshan is scrambling to find a solution to their massive losses. The London Metal Exchange has not said when it will resume nickel trading. Nickel has been roiled by the war in Ukraine, with Russia being the supplier and producer of 16% of the world's high-grade nickel. Traders are now panicking as fears that more sanctions could be imposed that would disrupt supplies. Things are going to remain volatile this week, so remain realistic and zen as we survive through these events. AMC had a bearish performance this past week. It began trading above $17 and through the days, continued declining, breaking below 14.40 first on Tuesday and then again by the end on Friday. I think this week could be crucial, where we see AMC continue breaking below 14, especially if the meeting on Wednesday shows a more hawkish Fed planning to increase the rate hikes more than expected. AMC will have resistance at 14.80, 15.20 and 15.60. A bullish earnings report for GameStop on Thursday, if the Fed isn't too hawkish and destroys the markets on Wednesday, could have AMC go up, but because we don't know if it dips below 14 by then, it's impossible to anticipate how much it could go up momentarily. GameStop had a bearish performance this past week. It began trading above 115 on Monday, and by the end of the day, it had already broken under $16. It would bounce up the next 2 days, meeting significant resistance at 107.50, but would ultimately go down again on Thursday and Friday, closing at 92. This week GameStop has that earnings report on Thursday, but with Tuesday and Wednesday being much bigger in terms of the events coming up, it's impossible to price in how much it could get affected. I remain super bullish about GameStop in the long run, and am planning on continuing to buy the dip as much as possible in the coming days. Right now, I think the stock could test lower support walls at 87, 85 and even 82, with major resistance walls to be expected at 97, 102 and 107. It's going to be a crazy week, and I don't want any of you to go through it alone. Please consider joining my Discord. I will be there present every day talking about everything important going on. You can ask me questions. We have a very active community there, so feel free to come join us. There will be tons of updates and information being shared there every hour in relation to the markets, the war in Ukraine, GME and AMC and much more. I will leave a link down in this video's description. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.